Hey, it's the market sniper, it's Easter. You know when the missus says you're not recording in that shirt, that it's time to record in the shirt. That's right, your Easter edition coming at you. For those of you who want to have a go at me, I am misappropriating potentially the style of a Venda tribe of Southern Africa with bright colors right here on the Easter weekend. That's right. We've got a very interesting session for you today. A little bit Easterish, you know. The world, Easter is actually for Orthodoxy the most significant weekend. And with this particular video, I think it's nice to go to the most significant thing. Asymmetry of information, truth. We're going to be talking about werewolves. And we're going to be talking about a misinformation world. In fact, on that, let's get Robbie Williams into play. It's a popular clip, many people have seen it. Let's hear what the Robster has to say.
We're in a post-truth world where you can't believe the media, you can't believe Big Pharma, you can't believe politicians, you can't believe what you're eating, you can't believe yourself. It's you know, if at any time in human since we've existed, there is a time where this whole empire could fall, it's now. And it's of course these things are going to rise because we can't trust anybody or anything. And I personally just believe and invest in my wife and kids and family. And I believe in them. We're in a post-truth world.
Somebody is finding the walls closing around him. Nothing is honest. Nothing is as it seems. There appears to be flipped narratives and asymmetry of information. We're going to be talking about Drumpf and a popular new character called Sachs. Yes, we'll get to him in one moment. But before we get to our friend Sachs, who's fast becoming, actually, let's just have a look at this, fast becoming the doyen and go-to guy for explaining the financial shenanigans. That's right. You absolutely have to watch someone's shrieks here with our friend Jeffers. Let's call him Jeffers, shall we? Jeffers is breaking the truth, apparently, for many people. Let's maybe take a little look at what Jeffers has to say. You must watch. He's brilliant, honorable, honest, insightful, and frank scholar. In fact, our friend Jeffers is very earnest looking, very well groomed, very well spoken, shows up in a nice suit. He's the Arsene Wenger. Looky-likey. The professor was the Arsene Wenger, by the way. The thinking man's football manager hero. That's very much a UK Arsenal Football Club thing for the Americans who won't wonder who Arsene Wenger is. But they look very similar. And let's listen to our boy Jeffrey explain Drumpf and tariffs. And you're going to find a lot to agree with. But there's a catch. There always is. Let's watch and
take your credit card and you go shopping and you run up a large credit card debt, you're running a trade deficit with all those shops. Now, it would be pretty strange if you then blamed all the shop owners for having sold you all those things. You're ripping me off, you're ripping me off, you're ripping me off, I'm running a trade deficit. That is the level of understanding of the President of the United States. The trade deficit does not represent at all trade policies. It represents spending relative to production or earnings. We call that an identity. I teach it in the second day of my course in international monetary economics. Trump never made it to the second day. So he says, you're running a trade deficit. Look, they're all cheating me. But all that's happening in the United States is outspending its national income. And you can look at the national income chart. You can add up consumption and investment and government spending. And you can subtract off.
So far, all this is right. Okay? America has an overspending problem. The other countries do not have an overproduction problem. You never blame the store that because you ate 10 hot dogs, you blame yourself for your greed and you now feel sick. Exactly. They will keep selling until you stop buying, basically, and that's business. All right, all well and good. Thanks, Jeffers.
Gross national product, and lo and behold, what will that equal? Not approximately, exactly. That will equal the current account deficit, which is the comprehensive measure of how much you spend on goods and services versus how much you sell in goods and services. So the United States runs a current account deficit because it spends more than it produces. Why does it do that?
So we've highlighted about the road and the path to wealth. And in our previous YouTubes, we've said, live within your means, invest the surplus wisely for your times, which is gold right now, it won't always be. In other words, produce more than you consume, and America is the exact opposite of that, and China is that. And in fact, China is investing much as we advise. So China is actually Francis. How's it, my China? I've got biceps. I'm strong. I'm not getting weak and old. The American is getting weak and old. He's eating too many hot dogs. Okay, that's kind of all very well and good. This is very ABC, simplistic stuff. What I want you to watch for is who gets the blame.
We have a big credit card in the United States. It's called the national government.
It's interesting that he's using credit card. This is an analogy we've used. Black Amex gets pulled for a credit card with a limit, no longer a bottom. We've referred to the bottomless overdraft being pulled. There's now a number. You've got to live within it.
The U.S. government spends about $2 trillion a year more than it takes in revenues. What it's doing is making transfers to the American people and American businesses. It doesn't tax Americans for those transfers because here's another fact. Because the congressmen that vote on the budget got into office by being paid for their campaigns by rich people who don't like taxes.
Actually, so it's interesting, this visit on rich people. Rich people bad, okay? Rich people bad. Now you get rich, and then you get super rich, like the kind of people that pay Mr. Sachs as the handler and as the narrative controller that I'm going to be calling him at the end of this clip. You see, this is very like our Gary Stevenson's video. Gary Stevenson's Rich Man Bad. So you get the rich, like this surgeon that's on $250,000, $500,000 or pounds a year, maybe more, working non-stop, doing operations, etc., paid consultancy, everything in Britain. Now they're going to up the salary there. The billionaire class, the centimillionaire class, the Philip Greens of this world that robbed the pensions of British home stores, got his dividend paid to his wife who lives in Monaco. That's not in the rich. That's just the clever businessman. That's an internationalist, mercantilist that is in the ether that flows Cayman Islands, Panama, Cyprus, all over the place, all over the world, and never quite works, but has huge dividends. Okay, they always do just fine. Now, those people do pay for politics, and that tends to see the likes of Apple corporate, Google corporate paying less than 1% tax. In the United Kingdom, for example, a fraction by having all the transfer pricing abilities, local head offices in Ireland. All of this has been allowed, but the rich earners, income earners, the surgeon and the doctor must pay for the fact that these people are not paying. Why? Because the super rich invest in each other's shares that go up an immense amount because they pay very little tax as part and parcel of their structures. So when he says rich, he's going Gary Stevenson rich. You guys that will be spoken about, they'll refer to billionaires, but it falls on the upper middle class and middle classes in due course that do not have structures. Let's let him carry on.
So the political system says spend, but don't tax us. So we run a chronic deficit in the United States. That spending goes out either as transfer payments or goods and services, and that's more than our national income, which is about $30 trillion. $31 trillion.
Your national income is not what you think it is. It's worse than that. But anyway, don't focus on the numbers, focus on the principle.
And that's our trade deficit. And for that, Donald Trump blames the world. Okay.
Tell me if you're catching the theme here a little bit.
I failed for this if he were my student. He's my president. It's a little weirder Because when he did this, in 2 days, the world lost $10 trillion of market capitalization. By the way, where did it go? Did it?
So the other thing is characterizing major disinflationary events with hypervalued assets. Hypervalued assets on debt that actually, when they start to realize how they are, and we've all been talking, housing is overvalued, share market is overvalued, dumps one day and can pump another. Yes, of course he's creating uncertainty, and of course it's largely down, and actually it needs to go a lot lower. But this notion is, whose fault is it? The fault is Trump. That's basically where he's taking you.
Get transferred from here to here? No, it got destroyed. Why destroyed? Because trade, something also the President of the United States doesn't understand, is mutually beneficial. So
that's a 2 point, and the whole pie gets bigger on this. So there's a lot of truth being dropped. This is why everybody loves him. He explains so nicely. He's a professor.
If you stop trade, everybody loses. It's not that one side loses, the other side loses. He cannot understand that concept as a guy that traded real estate.
You see how it keeps coming back. He cannot understand that concept.
In New York. So his idea is somebody had to lose. What happened when he made this announcement was $10 trillion was wiped out worldwide. It's not that the U.S. went up and they went down. No, everybody went down. Because the whole system is based on a division of labor. And
it's also called uncertainty in markets, and he's not a master of markets. He thinks he's a master of economics. He's not bad. I'm not going to tell you he's stupid. He's a very well chosen narrative controller, very much like Eric Weinstein regarding CV19, who's now left saying everybody should get off this rock. I think he means planet Earth, and that Twitter is awash with anti-Semites. For always tiptoeing around who was actually the primary owners, despite being 0.2% of the population of all the pharmaceutical companies, who was Walensky, who was in charge of the CDC, who was this, who was that. Anybody who points this out is obviously a barbarian, a savage, an absolute Nazi, an anti-Semite, and everything else. So that's where our friend Weinstein now resides, after being on Rogan, on every podcast, whipping around the whirly, the equivalent of the US podcast circuit with everybody who has a high profile. Anyway, back to our new friend, who is the Eric Weinstein of explaining finance for everybody, and seems to have found a perp. He seems to have found a perp. Tell me if you're sensing that.
He's breaking that division of labor into pieces. So then people said, this doesn't make sense. Even the very rich people that gave him the money to get into office started saying this doesn't make sense. The hedge fund managers who were his big campaign contributors, Elon Musk, who paid for his election, became prime minister. He said this doesn't make sense.
All the little gags as well, well, that's your system, but that you allowed it to happen. So Soros in many ways, but so what? This is all a misdirection.
And then the market said this doesn't make sense. Not only $10 trillion, but as the minister said, interest rates started to rise because people began to dump U.S. Treasury debt. So,
a contribution there from the sidelines. So, the first thing is, as you know from me, since 2020, the bond market turned, and it's been due collapses and more collapses, and in fact, it's been due an acceleration of collapse and devaluation, and that's what's happening, and that's why gold is running. Gold never gets mentioned by our boy Jeffers, which is actually the main canary in the gold mine of when things go wrong. And of course, debt needs to deflate, and so does the dollar and the currencies associated with it. And we had an example of it happening simultaneously, which typically never occurs. So a major loss of faith happened, but that's got much less to do with Trump being an idiot with having no room to move left to him by the previous administration. Rather, it's got a lot to do with the multi-generations of handlers that have been around presidents and Fed chairs since Greenspan, Shlomo Bernanke, and everybody else up to today, the banking cartel that owns them, that is all run, and the asset managers like Lowell Finkelstein and everybody else that is contributed and owns all the banks, bank shares that control the Fed, and then does their ADL, APAC, more on that to come, choice of puppets to run the theatre for you in terms of it's all Trump that did this. Let's let Jeffrey continue.
Interesting what happened. It's not quite true that he reversed first he left on this 10% tariff, except for one country. for China. 143 raised the tariff rates. That's because the United States has a deep neurotic attachment to China. The U.S. political system hates China. Why? Because China is being successful. And so that the U.S. hates. It's a rival, it's a competitor, and so this is the one thing he left on.
Listen, when you're the overweight consumer, you blame the oversized supermarket that provided to you. That is, again, another fact and a hard truth. It's everybody else's fault except you, fat boy. But how did you get to become so fat? And is it something that's just happened here and now with Drumpf, the practiced apprentice star that was carried by the Rockefeller cartel with a bottomless overdraft when he was made bust with his casinos and property holdings way back in the savings and loans crisis long time ago, but continued to live the life of a billionaire whilst actually having a negative net worth. Who carried him? Why did they carry him? Is he doing payback now? None of that gets mentioned by Jeffers.
Now he's going to mess up everything with this too, because in a trade war between the U.S. and China wins. China does not depend on the U.S. market very much. It's about.
It actually does a bit. He says 11% of markets, or 12. The stat I got was 19, and quite a bit go through proxies like Mexico and others. So again, let's not fascinate about the numbers, but the concept. But I'd rather be China than I would be America. Somebody who produces and lives within its means and stacks gold, rather than someone who overspends, doesn't live within its means, and is reliant on everyone else buying their debt, and suddenly everybody is asking, by the way, Europeans Treasury group suddenly said treasuries, US treasuries, are no longer to be, are not untouchable on questions, being questioned as to the soundness of their status as a reserve asset. That happened April the 15th. We'll show you another thread that we did on that. But let's just hear our boy Jeffers, 12%. Look, they wouldn't want to take the hit for 12% or 19%. That's the number I got, not including the proxies that they do Vietnam also. Some things go to America via Vietnam, go via Mexico, and other things that I'm sure he hasn't included in there. But let's not, as I say, fascinate about the number. Let's play principle.
12% of China's exports. China will do just fine. It's just dumb policy. There's no more, sorry to say it, there's just no more explanation to this than that. It makes no sense. Now, it raises one last point. How can this happen when it makes no sense? And that people should understand. We are in one-person rule in the United States.
You see? One-person rule. And in fact, I'm not even going to let it play out. He's taking too long to make his point. We can maybe put it on 2x. But essentially, he says everything is executive order and it's all down to Trump. In other words, you dang voted for the wrong guy. Never mind. Just 4 years and you get a chance again. But we've tried that. We've tried that every 4 years. And every 4 years has continued to stack and grow the debt. And every 4 years going back all the way through to 1970s. In fact, apart from when Volcker was in charge, was there ever a time that we weren't stacking debt? And what was happening during Volcker? Well, it was terrible times, and he was devaluing the debt by shoving the interest rates ever higher, and you went into chronic stagflation. That's the one time in our lifetimes that you detoxed, ever. And he continues to go on to say it's all executive orders as a result of Trump. To much rapturous applause, Professor did explain it all. It's all Trump. Now you understand. It's Trump. It's Trump that did it to you. You voted wrong. He said all the right things. Then he got in charge. He brought in anti-Semitism laws. He hasn't released the Epstein lists. He brought in the ADL and APAC handlers all over the shop. He's got Rutnick in the wings looking behind the curtain, but it's all Drumpf, you understand. It's toxic bank, toxic person, wrong policy, becomes a billionaire, largely loathed, leaves in disgrace like George Bush after 2 presidencies when he was initially, oh, thank God for George Bush Jr., he'll be better than Clinton, the slimy weasel, just like Clinton was, oh, thank God, the sophisticated Clinton instead of the ex-CIA head, George Bush's dad, senior. Oh boy, we sure seem to be bouncing around in a very small selection community. Half of them all Skull and Bones members, and etc., etc. So here's the narrative, my summary of the narrative that comes out of this man. Essentially, US overspending is not the world's problems. Oh, he also goes on to say he's making the announcements of certain things and there seems to be insider trading. Everything we've told you and handled already on X. There's a Caucracy of inside trading. He actually stood next to Trump, Schwab, and said he made $2 billion today and the other guy made 900 million. So he helps a billionaire get long on Apple options that are expiring that day, bought for a cent, that end up squirting up when he announces and sell for $12 plus. Imagine the multiple, 1,200 on your money. How much money would you put in if you're already stinking rich from being an insider cartelist that just so happens to also be Talmudic? And now you get to be given a sure thing bet thanks to your Talmudic but don't admit it name guy whose kids are all married into the cult. Yep, and they're gonna roast Trump as the guy that broke America. As if this over-indebtedness just happened overnight and there he gone and done it. He just gone and done that damn thing. When he had no room, the poison chalice. Am I running cover for Trump? No, he's one of them, he's their chosen actor. And this is clever vilification, tells you a lot of truth. America is overspending, it's not the world's problem. We told you that. We told you that. Many times in many different ways. Treasuries got sold off because of the unsustainable flow of red ink. And of course, we told you treasuries and dollar would break. Remember that image that we once showed you of the pound. I think I got it somewhere around. Let's see. Oppie. We told you that. We showed you this diagram here of reverse bonds, BOE support with the pound and UK crisis, which was September of 22 when Truss and Kwasi Kwarteng got thrown under the bus, when the UK only upped by 0.5%, when America upped by 0.75%, and essentially the pound got crashed. They couldn't, and they did a mini budget that was stimulus, so they were going to not tax too many people and try stimulate the economy. That meant more debt would be issued, and this entire system actually broke because Britain doesn't have the same level of faith as the others, the same depth in its debt market, and we said this is a microcosm of what will come. Currency down, instead of the normal seesaw where the skinny guy, the currency is up because the rates because the bond valuations are down, or vice versa. When the rates go up on the bonds, the bond values are down, the currency also is up. What we have is a typical seesaw. You actually got the seesaw breaking. In other words, when the rates went up on the UK debt, the pound actually, instead of getting more inflows to earn those higher rates, went down and the seesaw broke. And we said that's a microcosm of the day that will come for America. You will have a first event where that occurs. You had it 2 weeks ago. We predicted it. We shared it when we showed this chart. This that has happened to the UK is a microcosm of what will come for a far bigger market, America, in due course. And it happened. And it happened, and you can go and see the video we did in 2022 that told you that this would happen. Dollar will go down on a decreasing debt and an increasing rate. So even though you're paying more money, more interest for people that will deposit in dollars, you're actually getting a devaluing dollar. That happened in the weeks that just passed, by the way. Go and check it out. So yes, treasuries got sold off with the dollar on unsustainable red ink. The Caucracy of insider trader is quite clear. They're literally doing tweets now for the insiders and cryptic things. They'll all know what to do. But if he tweets it, that means everybody was told, although it's not clear what they've been told, but the insiders know exactly what they've been told. It's kind of like code for the insider. Who are the insiders? This is who runs your country. Go and find out and study a bit more. We've got the Werewolf story for you to go through, but let's just see. So everything there is all well and good, a lot of truth. But the disagreement points that most don't see and are all eating out of Sachs's hands. He's like another boy genius, so smart and eloquent, like Eric Weinstein, Wasserstein, that was explaining to you all about COVID and saying it's wrong and there's something gone on there. They ride a wave of truth and then they pop the pivots at the end, you see, and everybody goes, he's right, look how well he says it, look how smart he is, yes, I suspected this, isn't that awesome? And they just follow him with yeses all the way. They have a new hero to believe. They have a new hero, a new narrative controller to believe. The disagreement points that most don't see, that are eating out of Sachs's hand, is the financial narrative controller. This guy is the Eric Weinstein of COVID-19. None of them will actually say who is behind the control. They all quickly tie it up. Here's your blame guy. And they throw you some meat. It's Drumpf. You voted wrong. It's your fault. You voted wrong. You should have voted Kamala. It would have been totally different if you had voted the idiot, the prostitute. It would have been absolutely different. You would have had a different handler, and we would have also had a problem with the debt. But never mind, never mind, never mind. You voted wrong. The false choice. You voted wrong. So it's a typical XAUXAG summary that addresses the obvious that we have already highlighted and then isolates all the blame in a single individual. It's so neat. You just have to get rid of the one guy. That's it. He's just stupid. He's just a Nazi. He's just a Nazi, even though he's actually funded by, we all know who he's funded by. That's right. It's a single individual problem. That's it. And it's because of executive orders that it happened. This whole thing started with Greenspan on his ever-increasing wave of liquidity and was followed up by Shlomo and was followed up by the little Yoda poison dwarf that continued and then went into the treasury and continued with spending like a drunken sailor, and of course was handled and under control of the usual people. There are parasites that eat its way into a locust brain, I said, and this is true it's biological, and it has as its function, as part of its life, it actually controls the animal from within whilst consuming it, but not critically destroying it. And it can virtually, literally control it from within. And then when it's past its use and it's no longer a fresh host that's showing the wear and tear, it actually kills it. It has it commit suicide and it assumes and infests itself in a new host. That is what you're looking at. Sachs is a sophisticated narrative controller who rides a wall of obvious truth that most of us have already told you long before him, for a final misdirect at the end, to keep you in the hope and change vote system. You just voted wrong, you just need to get rid of Trump and get someone a bit smarter. But the problem is we were offered Harris as the smart option. Okay, the one that says to be, what to be, and is to be. Some sort of very vague, curious, non-Shakespearean, utter gibberish. So this is the issue. You keep voting wrong, guys. You just need to vote harder. Vote yourself some freedom. That's right, and you'll get a chance again. So there you go, the explanation of the obvious. It's not China bad, and of course China wins in this in the end. Of course it gets crashed. Of course everybody is affected by the big elephant in the room collapsing. That's what we are witnessing. It is going to affect them. But then you have to ask, okay, hold on a minute. Who is the big runner of the American government? Okay, so if we put a search in there, here's what we find. Who runs America? Who gets to put forward the head of the party? And here is what you end up seeing. And it appears, although I would even say it's worse than this, that this right here is who runs America. That would be your majority, I assume you would agree. Assuming you accepted it. Personally, I think it's worse than that. I'd love to think that there's that many people here in Democrat land that are not seizing the opportunity to become centimillionaires on an insider trading, Caucracy, handbacks, cashbacks, funding for elections, and every little side story that gets them perfectly positioned to build wealth. They're all amazing traders, by the way, and incredible investors at the cost at the cost of you, the American people, and the rest of the world, because this is the most dominant government of them all. And you will find that 199 APAC Republicans, 128 APAC Dems, and there you go. You have 200 plus 128. It seems like you have 327 out of the total, all part of the APAC ADL access. Isn't that interesting? Okay, so why does Mr. Sachs not tell you? At Sachs as in Goldman Sachs, kind of like, you know, that Sachs partner at Goldman. Why does he not tell you about that? It's all junk. It's all junk. You see, toxic bank, just ring fence, quick, isolate and ring fence the problem to one person so that the parasite that really is the parasite goes unseen and untouched and can infest whoever they represent as the next person who knows that it's part of the deal and will come invariably from this large meaty pot. That is there. So if you, for all these new fans of Jeffrey Sachs, let's just understand a bunch of truth and the pivot at the end. They've got to keep it ring-fenced and they've got to keep the narrative controlled. And that leaves you eventually with another character that's lost a lot of credibility and is on the wane, but served his purpose just like Drumpf will serve his purpose. You guessed it, our friend Mr. Weinstein, who nowadays, if you have a look at him, is reduced to saying, get off this rock. Okay, we all want to leave planet and go planet Zog or flipping Mars with you and elongated muskiness. How irrelevant he has become and what a useful servant he was with the CV19 narrative management. You see, you get these outriders that are quite smart, eloquent and capable of sitting in and debating and saying this and that and being these super cool and reserved and classy, always, you know, I don't get involved in this riff-raff argument, you know, I'm above all of this very elite of tone type intelligentsia that are usually coming out of academia somewhere. They're professors and they're lecturers. Isn't it useful that universities are, of course, Harvard, Yale, CIA, all of them. I mean, did I say CIA University? I didn't mean that. Mossad University, etc., etc. They're all tapped up to manage the narrative for you. Okay, that's kind of cool and interesting. What else have I got for you on Easter weekend? Let's talk about the werewolf problem and the value of a real asymmetry of information. That's right. I've got it somewhere here if I haven't clicked too many times away from it. Here we go. I want you to watch and listen to this. And I've been meaning to do a clip on this many times because there's so many layers to this that I wanted to actually bring to the fore. But let's go and let's see how we're doing the werewolf. This is game, and this is how you have to think about game theory.
Have you ever heard of a game called Werewolf?
No.
Everyone gets a piece of paper. It's either got a villager written on it, or two, werewolf. Someone rolls the game to make sure no one's cheating. And they go, okay, it's not time, everyone close your eyes. Werewolves choose someone to kill. Werewolves go. They say, okay, everyone close your eyes, it's morning time, open them again. During the night, Francis was killed. Then the conversation, and this is where it gets interesting, between all the villagers and the two werewolves, over who the werewolves are. Then at the end of the day, the villagers have to decide who they're going to kill, and they say, well, we're going to kill Constantine. It's revealed by a person who won the game afraid Constantine was a villager. And the game continues. The villagers win the game if they kill both werewolves. The werewolves win the game if they kill all the two villagers. And the werewolves usually win. The game was invented by a student of sociology in Russia who wanted to prove his...
Let's just listen to this piece again.
Invented by a student of sociology in Russia who wanted to prove his thesis win the game if they kill all the two villagers. And the werewolves usually win. The game was invented by a...
And the werewolves usually win. So a minority that has the information of who the perp is, knowing it is them, working against the uninformed majority, usually win. Listen again. We're giving you truth here on Easter weekend. Most of you can't handle, some of you can. The minority who have the full information and who will go about misinforming and deceiving and being deceptive and talk part truths and then pivot at key moments so that you trust them will usually win. And we go back to what the purpose of and what point it proves.
Students of sociology in Russia wanted to prove his thesis that an uninformed majority will always lose a battle of information against an informed minority.
An uninformed majority, it doesn't matter how big the number, will lose the battle of information. And markets trading, whether you know what is healthy or not, will always lose, no matter how many there are of you, because you're all stupid. Not because you're actually stupid, because you've not been given the data and the information. Controlling an asymmetry of information, when you are that minority, you get to win. At the cost of the masses, and that is the world we live in.
So that just shows when you have hidden information, you can completely manipulate a large group of people.
When you have hidden information, everything, go back to the Robbie Williams video, everything we are being given is a lie. Lunar landings, Mars, look at our rover, our little go-kart that we're manipulating from our little remote control, driving a tank on Mars. Isn't that clever? You'll be there in a tank in a bubble of oxygen with a temperature 215 degrees C outside. You can look out of a nice molten glass window and you'll have a corner to pee in and canned food and rations. Of course, we'll transport you somehow. Allah, the landings. Did you see the space landing? Did you see Bezos and the girls? Oh, isn't that cute? And muskiness and all of that. All going on. Asymmetry of information. Okay, get off the rock, says Wasserstein. Now reduced to that after completely having lost all forms of credibility for not wanting to touch or be honest about who really was running the CV19 events. And he came in to say, you know, it's a real, you know, these disclosures. The limited disclosure guy who pivots. That's right. That's where we are. That's how things look. Okay, that's kind of interesting. Think about that one. Let's go play with our bot provided by us. We suspect a little bit of a Zio bot, but let's just ask different questions. Let's go, because people are calling tops on gold. Is it a top on gold, he says. Is it a top on gold? Wow, you're getting lots of gold today. You're finding out about narrative controller, Mr. Sachs. You're finding about the Werewolf game regarding the asymmetry of information and the ultimate control. Feed people as much BS, lies, and confuse them. And you absolutely control them when you are a minority who knows the truth. I wonder who is the makeup of that minority generally. And then you've also heard Robbie Williams, an everyday guy, just pointing out he has no idea what to believe. He's pulled all his horns in and just trusts in his tiny little family. That's what they do. You don't know what to believe, then you know they are winning. When everyone is in such a state of confusion, that's what they want. So is it a top in gold? There are many a top corner. So here, let's do an exercise together, shall we? Top 20 nations by GDP list only. Let's go and see who the big nations are. You all agree that, by the way, it's big nations and central banks and institutions and hedge funds buying the gold. Retail's largely not involved on any great degree. We are minute relative to the big buyers. In order, number and GDP, please. So let's keep coaching him. There you go. United States 25.5. China, you would expect all the usual suspects in there through to Switzerland. Include the nations of, have we got Australia in there? I'm not sure we do. Of RSA, New Zealand, Australia, let's throw in Indonesia, let's throw in Ghana is a gold producing nation now. If we throw in some Africans, what about Egypt, Morocco and Nigeria? Okay, so we're building a list of GDP nations. How are they now? And also number by size. Now we're going to ask how many USTs by value do they have? We are building a table. How much does each nation hold in USTs? Also, how much gold does each nation hold? Also, how much debt of other nations totaled with US debt does each hold? Now, how much of equity in any nation does all these nations hold? So what I'm going to ask, essentially, to tell you where I'm going, is list me some big-ass countries, list some gold producers that maybe aren't caught in the big-ass countries, tell me how much they hold of American debt, how much they hold of any debt in total, how much they hold of debt and equity, so as a fund, how much assets do they hold, and then tell me how much gold do they have. Then let me know the gold by value. We're going to say it's 3,350. So if they told us how many tons they hold per ounce, how much gold by value does each nation hold relative to all the other assets that it might own? As a percent of all assets owned, equity, total debt holdings, plus gold. What percent is the gold? Add as a column. So we're asking questions and we are hopefully getting a table. Provide as a table. Repeat the table. Ordered by gold percent of holdings. So, I'm writing terribly, it understands anyway. Let's go and have a look at our table. Here's our table. So far, the United States of America has 1.4% of total assets. That's equities that it holds, treasuries that it holds, held in gold. 1.4%. It's a top in gold, but America has 1.4%, the country. Never mind retail, they're insignificant in this. Let's say, not insignificant, but small. Japan, how much does it hold in gold? China, 0.56. Now, I need to say something on China. The notion of how many metric tons China holds is understated, and that number is for sure understated, and they have not told you to the degree, in my personal opinion. So I will, in terms of publicly available information that Grok is likely to find, I'm going to tell you that number's wrong. And it understates, and I think it understates very badly. But that's my opinion, and I have no proof. But just on imports alone, it went significantly. I think they did 1,300 tons in the last year. Japan, which hasn't bought any new gold, 0.31%. Germany, 2%. India, the country, doesn't include the citizens. I didn't include citizen holdings in that. The nation state, 0.94. Citizens will be high. We know that, okay? It's not in the number. It's personally held. The same goes for China and all other countries here, but certain ones, it's a more significant feature, like India. United Kingdom, the empire, that's the new buyer of great zeal of American treasuries. Talk about toxic bank and ring fence isolating the absolutely destroyed. 0.14. They sold 400 tons under Gordon Brown at $250 odd. 0.4. Okay, that's how much gold it has. 310 tons. It could have well more than double that. Even if it did, it wouldn't get to 0.3. It's at 0.14. Okay, 0.14. France, where's our number? Why do we not have a number for France? I am angry now. Last time I did this, we got numbers. Here we go, let's do the next one. Now, what I've done in the last table is I've actually reordered it by the ones that have the highest percentage holding in gold. And who do we have? Big ass table, take us to the bottom, and then we can go back to the top. Now we can't see the nation, but Switzerland, 3.67% of assets. Now it has a huge equity, MAG 7 type holding, the SNB, so that's kind of interesting, but that's one of the highest, 3.67. Italy, 3.28. Germany, 2.2%. Russia, 2.78. Not bad. How much gold? 2,000 tons. Debt, very low. Something to bear in mind. Financials. United States, 1.44. Okay, by the time America shows up in the table, we have 1, 2, 3, 4, 5, 6. They're number 6. Assuming they have the 8,000 tons they claim to have. Okay, Turkey, 1.18. 1.09, 0.94. Everything from India down is sub 1% of assets. Less than 1% of total, and 1%, guys, 1%. I don't buy anything in my portfolio for 1%. It's not worth having. It doesn't matter if it quadruples. It's not making a meaningful effect on your account. Nothing quadruples in a hurry. But, I mean, it's just 1%. I mean, what 1%? It is an absolute rounding area. South Africa, that once in a single year had over 1,000 tons of production, has 125 tons in total. 125. I'd love to know that that's still there as well, by the way. 0.93. Once number one gold producer. Netherlands, 0.75. Saudi Arabia, 0.73. This is where we are. Saudi, what number is Saudi? They will have a little too much American debt, I might think. Morocco, 0.55. That was a bit exotic of me to include them. China, down here. But as we've said, that number, the official number, is 100% wrong in my view. I think it's something like 10 or 20 times more, possibly. Spain, 0.5. Nigeria, 0.48. Ghana, now a big contributor. 8 tons. 8 tons. There'll be stackers that are centimillionaires that will have more gold than what's becoming one of the biggest gold producers. Japan, Mexico, 0.3, 0.2, 0.2, 0.1. Australia, 79 tons. 79 tons. A massive producer. And they have less than South Africa, which is a Caucracy of its own kind. South Korea, 104, 0.15%. So let's get this straight. The bulk, a sophisticated nation like South Korea, that is bringing you Samsung, LG, and all of these things in a debt-based collapse time, has less tonnage than South Africa, who is a Caucracy, as we all know, like all these others, at 104, which makes up 0.15%. That is like a little museum piece. It's an ornament. It's an ornament. It's not even a Ming vase. It's a chip off a lid. of a Ming bars. United Kingdom, 0.14. Hooray for United Kingdom. Canada. I'm a lumberjack and I'm okay. Oh, good night and a big all day. Hey, Canada, 0%. 0%. 0%. You're a producer and you have 0% of the most valuable assets in a stagflationary time, and you have none of it. And you're holding other things. You have absolutely none, but you have trillions of debt, billions of debt, and you have none. New Zealand. New Zealand. The collapse of the West, my friends, right here in numbers. And the top call of gold. The top call of gold, nation states, in terms of their protectedness against a reset of debt-based collapse, for which the only asset that will still be there in the vault and will not have got smaller, liquidated, does not have an attached and associated liability, has on average these nation state numbers, for which the absolute maximum was 3.67, the bulk or the mean or the normalized is 0.1 something, 0.2 something. If you have above that, you're almost an outperformer sitting here at 2% Germany. You're in the top 5 in holdings of gold relative to other asset classes, many of those asset classes destined to go down. If you were a hedge fund and you are sitting here and that is the allocation of hedge funds, which hedge fund are you buying? Any of them. Are you buying any of them? If you bought Switzerland, you get 3.67%. You're going to get MAGA and debt, mainly. 96.3% of garbage that's going to go down. That's the smartest nation in the world right now with the strongest currency, the Swiss franc. And that's what you're getting. And it's a top in gold. And you've got all that debt to collapse down further. I've just told you the early doors of a debt-based collapse is that flash where the dollar went down on rates going up. Both debt and dollar went down. That has to happen many more times for far longer, and you have to bleed out so much money, and there has to be... Tesla is still trading in the upper 90s price earnings ratio. Okay, not even the best battery. Other stuff far better being made in China, in an environment where you ain't going to be buying cars, let alone battery cars. He's selling the iPhone that will drive you to work on autopilot and take you to the police station for your social media crimes and lock you in the car until their universal key releases you into your cell. That item. And 90 plus of his revenue is that. So don't tell me about Mars, moons driving, auto taxis and other garbage. It's a car business. Okay, so there you go for your top call on gold. It isn't happening right yet. Not for me, not for now. And how much is it in hedge funds? Let's ask. Biggest 100 hedge funds and home offices. Now, you've got to remember this data is coming from Grok. It's not going to be faultless. Principle, not direct numbers. Nothing I say of a number that I come here with, I quote like a living expert. It's going to be guidance. It's going to be what's publicly available on tweets by people who supposedly know. It's going to be inaccurate. It's going to be a guide. Okay? Largest. Table form. Total assets under management. Include all assets. What percent is gold? Include the flawed ETFs. Let's see what degree the institutions hold gold. I don't need their headquarters. Don't make this more difficult. Okay, table of top 20 hedge funds will be a start. The top in gold is certainly in. We have 2%. Bridgewater's Associates has 2%. That means 98% in these times is not gold. And that's one of the highest. Citadel, 1%. 99% is all the other crap. DE Shaw, Millennium Management, AQR Capital Management, Man Group, 2%, wailing in there. A mighty 2% holding. A mighty 2% holding in gold. Let me tell you, I'm more than 20%. I'm not here to tell you what percent you should be, but I'm way more than 20%. Okay, I'm not a hedge fund, I don't have responsibility for the volatility of being very strong on one particular asset. This is gold times. Tell me when these guys that are doing asset management and can't be overly exposed to one industry have in form of gold miners and gold 25% or going 50%, and I'll call the top in gold. Right now, 2, 1, 0.5, 0.5, 0.5, 0.5, 1, 2, 2. 20 largest hedge funds. The minority is 2, the majority is 1, plenty at far less. That is where you stand. That is where you stand. London, New York, Frisco, Greenwich, Paris, Munich, everybody talk about pop music, talk about. They ain't got gold. They're going to lose out. We know they don't. Yeah, that's how it's going. There's a lyric for you. I'm Francis Hunt, the market sniper. I'm done talking to you. I'm telling you the way of the world. This is not the top in gold, the debt markets, the holdings in debt. Oh my God. Bond holdings in debt. Bond funds. Tell me when we have as many gold funds as we have bond funds. Or tell me when we have twice, 3 times more and all the bond funds are bust. Tell me then and I'll tell you it's the top in gold. Till then, I'm telling you, you buy every damn dip. It's the only place where BTFD still will apply. It does not apply in any of the other assets. The gold market broke. By the way, this is not 1987 where you can drop rates and reinflate. It is not 99, 2000 where you can drop rates and reinflate. It is not 2008 where you can drop rates, struggle, do QE1, continue to struggle, do QE2, still struggling, do QE3, slowly grind your way out with a bit of Operation Twist and QE4 type narratives, struggle your way back up out of a depression. Then 2020, it is not 2020 either, where you can conjure up 7 trillion in the US and throw it out, never mind the 21 trillion that went to European and US banks in loans. Never mind that, to keep them on the go after repo market went ape in September and October. Never mind all that. You reflated it, you broke the debt market. 2020, our biggest call ever. It's bigger than gold. It's bigger than gold up and oil down to single digits, which was a pairs trade, by the way. Finally, maybe just before I sign off, I shouldn't be signing, one more key point. Just before I sign off, we have warned people that the gold-silver ratio has the potential to run, yes, this is going to freak people out, 172 plus. It could do it. The notion that CV19 is going to be your biggest event ever is wrong. They're going to outdo it. They're going to outdo it. This is a bigger financial collapse than anything you've ever seen before. That's why the notion that we can't. Everybody struggles, and I was also looking. Hands up, we were looking for a head and shoulders here. It quite clearly wasn't. The key thing about technical analysis was when you think something might be something, and it keeps showing you that it isn't, believe it and change your mind. Everybody goes, at least he sticks to his guns, David Hunter. It's absolutely pointless idea to stick to your guns. When the information changes, this ceases to be a right shoulder around about here, we were holding on okay, it's a bulky right shoulder on a neckline around there. When it started to go, it had to go. It didn't. From then, all our coverage on this particular gold-silver ratio has highlighted that this is an upside continuation pattern. We changed our view. It's a positive, not a negative. Right flip-flopper below. If you want, go ahead, be my guest. We don't come here to dig a hole in the ground and die on heels. If you're not going to win it, withdraw. Go somewhere else. Don't surrender. Don't commit suicide. It's not the name of the game. This is a pattern which has potential to go upside. You can draw it if you like. Plus, more importantly, we've drawn a potential upside HVF. Is it beautiful? Is it perfect? No. What a crash that was from up top there to there. It was kind of unique. That is an upside HVF that has broken to the upside, and it has the potential to go beyond. Now, other comments about to be put in the bottom of this YouTube. Oh, you're such a bear, silver. I am bullish, silver. I am bullish. Look into the eyes, look at the eyes, look at the eyes, look at the color of the shirt. I'm trying to freak you out. It's like, ooh, yeah, just change the spectrum there. I am bullish, silver. Right now, in the beginning of phase 1, I am even more bullish gold than I'm bullish silver. And the degree that those 1%, 0.5% all have to become 10 and 20% tells me that gold absolutely outperforms, because big money moves big markets. Not small money, big money. And the big money chooses gold. And this is about the big money holding debt that is going down to zero. So the big movements have to happen. That's why this is the biggest end of crisis. It absolutely goes past. Going back, let's go to this chart. This is something we need to understand. Fed created roundabout here. Roaring 20s run up straight away almost, then a big crash. 18.63, so what are we looking at? The Dow Jones divided by gold. Please understand, this is a big ass move. This is big and it's coming. Massive roaring 20s over there brings you the depression. Falling from 18.63 gold ounces to buy you one basket of the Dow. Here, 1.88 ounces to buy you the Dow. Then the big 60s, the swinging 60s into the Vietnam War, spend, military industrial complex, sucking the blood, parasites sucking the blood, blowing up holes in the jungle, and nowadays, as I would say, BlackRock standing ready to fill them in at the cost of the US taxpayer as well in Ukraine in the future. But back then, you know, who knows who filled those holes in. A bit of napalm, bit of chemical weapons, all in the name of bit of testing laboratory on Yellow Man. Okay, what nice people, those guys that controlled the military industrial complex that we've spoken enough about. Spiller, absolute thriller with a bounce on the way down, took you sub 1. Took you sub 1, less than 1 gold ounce, bought you the whole Dow Jones, less than 1 ounce in 1980s. You are going below that this time, even more. The bigger the pump, the bigger the dump. That's how you go. This is how much central banks have brought you stability, by the way. 1913. Do you see 3 pump and dump schemes, multi-decade? I do. You might see them too. Highest of all, 45. 45 ounces of gold to get you the Dow Jones in the dot-com boom. We've never gone back to that high. It's part of the collapse. That was 2009, that one candle. This was 2011 QEs, 1, 2, and 3. This was CV19, that little dip and reflate is a double top, my friends. It's an M top, and you are coming to break down. There's your M top. This was 12. It's already in the time that I've been talking about this on interviews. It's been slipping. And we say half. It goes to half and possibly more. And by the way, that, if you take it as 12, which it was when I first drew it, it's already 11.75 now, and going to a half means 24x differential in the performance between gold and the Dow Jones. So that means if the Dow Jones drops by half, gold goes up 12 times. If the Dow Jones drops by difficult one, to 25% of what it once was, by 4, then the gold goes up 6 times. 6 times from here. Because this is priced as of now at 12 ounces to buy you the Dow Jones. It's actually a bit less, you'll get some change. If it goes below 0.5 in one of the biggest capitulations ever, if it reaches 0.25, for example, just a small bit more, this is log scale chart, don't forget, if it went to 0.25 on account of a massive pump that was almost, 60% more than the last high, so going to 0.25 isn't ridiculous. That's a 48x. That's a 48x. So the Dow could still lose 75%. could be divided by 4 and just hang on to 25%, and you could still go 12 times on gold from here at 3,350. That is where we are at. This is the big crash. This is a big correction. That was your CV19. So tell me now, when you see this, that it's outrageous of me, and not one, and we've been talking it now for 2 weeks, not one gold bull has discussed the possibility that the gold-silver ratio could take out even the CV19 high. Everyone has been awaiting the reversal. The technicals on this time frame, this is why it's easy for us. There's not that many macro technical analysts. We're the only ones out there. We don't even have to be good. That is an upside. We looked for the reversal. We wanted it to be a reversal. We emotionally invested in it as a reversal. We had a bias as a reversal, and we got told by the market no. What do? You open your mind and you say, remove the bias there, bud. It's not getting endorsed by what the market is telling you. You've got to go back and think again. This isn't a head and shoulders. It isn't. Don't try and make something that isn't anymore. It could have been. It extended, it went up when it wasn't supposed to go up. When it went down, it got bounced back up. That's a flush out right here. That's a bull flag that you're looking at in the pink, and this is a flush out. That is a flush out to the downside that pumped to the upside. That's a look one way, go the other way candle on a bigger time frame. This thing goes higher. Nobody's talked about it taking out. H1 on the top level, 128. No one's talked about it because they don't understand the scale of this. Everybody keeps thinking we're going to do 2020 or 2008. You do not have the same access to the bottomless overdraft to do that. You're going to keep suffering for much longer, much longer. Interest rates will not go as low as you expect. Debt's days are done. Hear me now. This is why I keep telling you, the call in late 2020 was the most significant call we ever made. The funding mechanism, the basis of the pyramid is gone. It's gone. You can't QE your way out of this. No one's going to buy it. It has to be issued and owned at the same time. Somebody spends it, somebody else owns it, that gets the interest payment. Who's going to lend? Who's going to be the one that say, I'll buy that asset? You create an asset and a liability. The liability guys go and buy a house on a mortgage, and the bank originates a mortgage loan that gets sold on to a pension fund. Who wants debt now? I'm asking you. So what's happened? Right now, 42% of refis and new mortgage applications are being refused in America. The banks don't want to originate debt anymore. 36% of vehicle finance loans are being rejected in America. These are ridiculously high levels for the easy credit nation that's made an absolute career of overspending, a la what Jeffers, our friend, looky-likey Arsene Wenger, Sachs said to you. And I'm saying to you, before he said it, without the misdirect about it's all yellow man bad, orange man bad. Okay? So now you're hearing it. They don't want to originate the debt anymore. A, because it's much less likely the person's going to perform to the loan. B, the rates aren't worth it. Rates have gone up on all of the ones they are approving in an environment where actually interest rates are lower. So actually the banks are increasing their risk pricing and refusing more loans. They only want the cream of the crop with super fat margins where they're absolutely certain they're going to get paid back by people that clearly have the means. Okay, not a good environment for subprime cars, not a good environment for subprime student loans, not a good environment for the subprime housing, not a good environment for even normal prime housing where you're about to lose your job because trade is being made to stop. What happens when trade stops? Much less imports, much less exports, jobs go. Jobs go, the unemployment number spills, contagion, people hire, stops, people have to sell their houses because they lost their job, etc. Contagion, this is bigger than you think. The quantitative easing tool is no longer available to the scale and the degree that you need because interest rates are too high. Nobody wants to buy the debt asset. Nobody wants the debt assets. They're sitting with 0.5% gold and they need it to be 10 and 20. They want to sell their existing debt assets to buy gold. That's what anyone smart realizes and is doing. That's what China has been producing more than it consumes and is using its surpluses to do. It bought 1,349 tons last year. Okay, this could go higher. I'm not saying it absolutely has to. Technical analysis is not the future. It's a probability-based system. This high can be run at 170, which could even have a blow-off moment well through at 200. That's it. You heard me say it. Can happen. Others are not talking about it. There's a lot of gold bulls right now, but they're not talking about the fact that the phase one will extend because the big money needs gold, not silver. Silver's too low value, too smaller market cap. It's the people's money. It's not, and where's all the money? It's sitting in the central banks, the hedge funds, the home offices, the centimillionaires, the billionaires. That's where it all is, and the debt. And the markets, the 98 Tesla PE, that all needs to sell out and own something that will still be there and still hold its value far better. The downside beta of gold is far less than silver. It's far more valuable for the scale of what's falling. It'll dip and go higher with whatever the cure tends to be. It will recover faster. You saw it in the yen carry trade. It didn't even correct 5%. We've shown you all the principles here. This is Easter. This is the Easter of truth. You're hearing it from the man in the bright shirt all the way with the vendor colors. He put it on for you because his missus said no. I'm here to tell you this is the big one. I hope you've enjoyed the video. We'll catch you next time. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.